Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Adamas Trust Inc. Annual Report. Adamas Trust Inc. offers a diverse range of businesses and services related to mortgage-related assets and real estate investments. The company's primary focus areas include acquiring, investing in, financing, and managing single-family and multifamily residential assets across the United States. The company provides various types of loans, including business purpose loans and agency RMBS, as well as non-agency residential mortgage-backed securities, RMBS. Additionally, Adamas Trust invests in structured multifamily property investments, such as preferred equity and mezzanine loans, to owners of multifamily properties. The company also owns and manages single-family rental properties. Furthermore, the company offers commercial mortgage-backed securities, CMBS, and other mortgage, residential housing, and credit-related assets and strategic investments. As a real estate investment trust, REIT, Adamas Trust qualifies for federal income tax purposes, allowing it to avoid corporate taxes if it distributes at least 90% of its taxable income to stockholders. The stock price of Adamas Trust, Inc. has experienced a significant increase in the past year due to a series of positive news events and strategic corporate actions. The company's strong financial performance in Q4 and full year 2025 was a major contributor to this growth, with a GAAP net income of $41.6 million for Q4 and $101.1 million for the full year. The acquisition and integration of Constructive also played a crucial role in expanding Adamas Trust's loan origination capabilities and strengthening its position in the residential credit market. Additionally, the company's strategic repositioning of its investment portfolio to boost recurring income and its active capital management activities, including securitizations and senior notes issuances, further contributed to investor confidence. The dividend increased by 15% to $0.23 per share for the final 2 quarters of 2025 was also a significant positive development. Furthermore, analyst endorsement from JonesTrading, which raised its price target for Adamas Trust from $7.50 to $9.50 and maintained a buy rating, further contributed to the positive market sentiment. Overall, these concerted efforts in financial performance, strategic growth, and capital management have collectively contributed to a significant appreciation in Adamas Trust, Inc.'s stock price over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in the mortgage banking industry are multifaceted. Economic recession or stagnation can lead to decreased demand for mortgages and increased defaults, resulting in a decline in revenue. Inflationary pressures also play a significant role, as rising interest rates make it more expensive for borrowers to obtain mortgages. Delinquencies, defaults, and requests for forbearance arrangements further exacerbate the issue, negatively impacting revenue growth. Regulatory changes can also affect the industry's operations and profitability, while borrower credit quality and collateral valuation have a direct impact on loan performance and revenue growth. These factors are interconnected and can have a ripple effect throughout the industry, making it essential to monitor and adapt to changing market conditions to ensure revenue stability. The company's net income has undergone a significant transformation between 2024 and 2025. In 2024, the company reported a net loss of $103,785, whereas in 2025, it recorded a net income of $101,106. This substantial improvement can be attributed to various factors. One key factor contributing to this change is the increase in interest income and expense. The company's net interest income rose significantly from an unknown amount in 2024 to $149,301 in 2025. This indicates that the company has been able to generate more revenue from its investments and loans. Another significant aspect of the company's financial performance is its portfolio of residential loans. As of December 31, 2025, the total fair value of these loans stood at $2.3 billion. The company also has a substantial investment in multifamily properties, with a total investment amount of $59.1 million as of December 31, 2025. The improvement in net income can be attributed to the combination of increased interest income and a more stable residential loan portfolio. However, further analysis is necessary to fully understand the implications of the company's equity investments in multifamily properties on its overall financial performance. The company's financial performance indicates a strong ability to generate cash from its operations. One key indicator of this is the positive operating cash flow, which stood at $134 million. This suggests that the company is able to cover its expenses and invest in growth initiatives without relying on external financing. Furthermore, the company's equity attributable to common stockholders for 2025 was a significant $80,624, indicating a strong financial foundation. With no contradictory information available, it can be concluded that the company is indeed generating positive operating cash flow, which is a crucial aspect of its overall financial health. Acquisitions are a crucial aspect of Constructive's business strategy, enabling the company to expand its portfolio and diversify its assets. The acquisitions include various types of financial instruments such as residential loan repurchase agreements, sustainable non-mark-to-market financing arrangements, agency RMBS through mark-to-market repurchase agreement financing, business purpose loans, residential mortgage loans, and single-family rental homes. In addition to these financial instruments, Constructive has also acquired consolidated multifamily properties, TBAs, forward contracts for purchasing agency fixed-rate RMBS, U.S. Treasury futures, residential loans at a discount to par, non-agency RMBS, CMBS and ABS, mezzanine lending investments in multifamily properties, and business purpose loans originated by Constructive. On the other hand, divestitures are also an essential part of Constructive's strategy, allowing the company to optimize its portfolio and reduce risk. The divestitures include strategic disposition of certain multifamily investments in 2022, consolidated cross-collateralized mezzanine lending investment, and certain mezzanine lending investments where a default has occurred. Furthermore, Constructive also disposes of assets from the portfolio on favorable terms, sells investment securities, receives principal repayments on residential loans, investment securities, and preferred equity investments, and receives sales or principal paydowns from investment securities available for sale. These divestitures enable Constructive to manage its risk, optimize its returns, and maintain a healthy balance sheet. The company's financial activities have been marked by a commitment to returning value to its shareholders. One key aspect of this is the payment of dividends, which has been consistently documented throughout various sections of the report. The company has indeed paid dividends on multiple occasions, as evidenced by references in pages 39, 42, 43, and others. In addition to dividend payments, the company has also engaged in share buybacks. This strategy allows the company to reduce its outstanding shares and potentially boost earnings per share for existing shareholders. The report confirms that the company has bought back shares on several occasions, with references found in pages 55, 134, and 69. There is no concern about inventory buildup or supply chain disruption. The absence of any mention of these issues suggests that the current situation does not pose a risk to inventory levels or supply chains. This lack of discussion implies that the current state of affairs is stable and free from disruptions, allowing for smooth operations without any significant concerns. That concludes the financial summary for Adamas Trust Inc. Feel free to comment below, and I will be happy to answer them when possible.